The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin, Jeong. In recent years, cryptocurrencies have evolved into a niche asset class, piquing the interest of stakeholders, including regulators and both institutional and retail investors. So much so that the Asia-Pacific region is ahead of the US and Europe when it comes to retail investors trading of the world's most popular cryptocurrency, Bitcoin. Now, the retail trading of Bitcoin, which is the largest digital asset by market capitalization, grew 6.4% year-on-year in January in APAC, according to Gemini's latest research report. Now, meanwhile, other major digital assets like Ether and Solana also recorded a significant rise in capital inflows in 2024, with Solana emerging as one of the fastest-growing digital asset ecosystems. With the cryptocurrency market rallying in 2024 and the crypto economy expanding, what are some emerging trends in the market, and what does the future of crypto look like for the region? Well, to find out more, joining me now is Kunal Chowdhury, who is the CEO of Apollo Investments Singapore. Kunal, welcome to the show.
Thank you for having me.
Thank you so much for joining us. All right, Kunal, just to start off, what are the key economic and political factors that drove the growth of cryptocurrency back in Asia in 2024?
I think, you started off this conversation by mentioning that Asia sort of led the world in crypto adoption in 2024, and that's correct. There are a total of about 327 million crypto users across Asia, which if you think about it, is a huge number. And in Singapore itself, approximately 25% of people in Singapore own crypto, which is quite phenomenal if you think about it. And I think the factors driving the growth of crypto in Asia can be probably broadly divided into three buckets. I think number one is regulatory advancements, which have provided clarity and stability and made people feel a little more comfortable about holding crypto as an investment asset class. I think second, you have innovative financial products, and in particular, I'm talking about the ETFs, which were launched early in 2024, the Bitcoin ETF in early 2024, and the Ethereum ETF in mid-2024 in the US. And that's given users in Asia as well access to crypto via these ETFs issued by global names such as BlackRock, Fidelity, Van Eck, etc., which has given investors who are a bit wary of owning crypto directly before access to owning them via these well-known names. And thirdly, I think it's rising investor confidence in digital assets as an asset class. I think we're all aware of the scandals that plagued crypto a couple of years ago after the fall of FTX and the collapse of 3AC and Celsius and a number of other crypto protocols. I think the crypto industry has spent a couple of good years, solid years, rebranding itself and working hard to regain trust in the eyes of in the eyes of investors. And this is no more evident in the fact that you have great institutional names like BlackRock actively pushing cryptocurrency as an asset class.
I see. Well, you mentioned that the regulatory environment is kind of one of the factors that drove the growth of cryptocurrency in Asia. But how have those regulatory changes across different Asian countries, contributed to the growth of the crypto sector?
I think we need to break it down country by country. Certain countries are more progressive when it comes to regulations and others aren't as progressive. Singapore under the MAS has been very progressive, I have to say. And they've come up with a framework which balances both investors' desire to invest in crypto assets and at the same time has taken a stance of protecting retail investors. Because at the end of the day, crypto is still prone to scams. Okay, we all are aware of this. And it's very important to protect retail investors from these scams. So the MAS in particular has done a couple of things. Number one, they instituted a crypto custody licensing regime to ensure security of crypto assets. So if any bank or any exchange such as Coinbase or a bank such as DBS keeps your digital assets for you, it has to follow a certain framework, which is in line with what the MAS has regulated. They've also talked about a stablecoin framework to enhance transparency as well. And the MAS in particular issued 13 new digital payment tokens licenses in 2024, bringing the total to 29 by November. So it's even allocated and made it clear which institutions and which companies can even have access to digital payment licenses. So the MAS has taken a very progressive approach. Right? Hong Kong, similarly, was the first country in Asia to launch a Bitcoin and Ethereum ETF. Actually, the Ethereum ETF was launched in Hong Kong even before it was launched in the United States. And the Hong Kong regulator has also been quite progressive as well. And they've gone after institutional investors as their key focal point in driving digital asset adoption. India, on the other hand, as a country, the regulator still is not overly fond of crypto, to put it politely, and is still very wary of crypto. Crypto is taxed very heavily in India. But despite that, India is ranked number 1 in global crypto adoption. There's still a lot of Indians who want to own crypto, but they are aware that it has its own pitfalls in terms of high taxation and transaction costs.
Right, I see. Well, since then, all these regulatory changes and the political factors and economic factors have, boomed cryptocurrency in the region. So what are the emerging trends in blockchain technology do you see shaping the crypto landscape in Asia for this year?
I think we're going to see a couple of things. I think first of all is what I call the convergence of AI and blockchain. As you're well aware, AI has been the big buzzword for the last 12 to 18 months. And I think we'll see a lot of instances where AI and crypto actually are converging in providing greater security and access to investors, both retail and institutional. For example, you can have AI-powered fraud detection or AI-powered predictive analytics within DeFi solutions, which will make crypto more secure. You can even have hybrid financial services, right, which incorporate both elements of crypto and AI to make financial services access even more efficient than they are today. The second trend I look for is the expansion of DeFi or decentralized finance. And DeFi in particular will continue to disrupt traditional banking. For example, through DeFi, you're able to do peer-to-peer lending, trading, and insurance with lower fees, greater transparency, and do it faster than traditional banks are able to offer and other traditional institutions. And Asia is actually leading this charge due to strong regulatory support and tech adoption. And I have to say, even in Singapore, for example, right, you're having some of the most well-known banks, such as DBS, actively providing crypto services as well. And I think we'd see this trend growing. And I think the third trend I will see is people have often asked me, what purpose does crypto serve, right? It just seems to be this esoteric concept and sounds a lot like speculation. I think that's going to change this year. I think number one, it's very clear to everyone that Bitcoin has sort of become the new digital gold. The same way gold was an essential part of all portfolios, right, for the last 20, 30, 40 years. I think digital gold, aka Bitcoin, will start taking over that spot in people's portfolios over the next decade. You're also seeing a lot more businesses incorporating elements of crypto into their payment systems. For example, most of us have Grab e-wallets on our smartphones. And I don't know if you're aware, but Grab in Singapore actually allows you to top up your e-wallet using stablecoins and Bitcoin and Ethereum. And it does this via a partner called AAA. So if you looked at your phone right now, and I did it before this call, you can actually top up your Grab wallet using Bitcoin.
Amazing.
So that's actually pretty impressive, which shows that crypto adoption is actually kicking off in a big way.
I see. Well, on that note then, how might, new financial products or services such as CBDCs or crypto-linked ETFs influence the crypto market in Asia for this year?
I think CBDCs are a bit of a double-edged sword. I mean, the whole purpose of cryptocurrencies was deregulation and decentralization, right? And central bank digital currencies actually reinforced the whole idea of centralized control, right? And that's actually why the United States and, President Donald Trump about 2 weeks ago basically issued a statement as part of his executive order, I believe, stating that the United States would never issue a central bank digital currency, right? So you have some countries like the US, which are actively staying away from CBDCs, where some other countries in Asia, for example, I know India is actively looking at CBDCs because they are worried about non-legal forms of payment, such as Bitcoin, permeating the economy, people actually using them as payment methods. But I wouldn't be too worried about that because at the end of the day, crypto is a very volatile asset class. And until it attains some sort of maturity, I don't think anyone will want to use it as a form of payment. I mean, if you just think about it, imagine if you paid for a new car using Bitcoin today. Based on the price of Bitcoin today, the car could be worth $100,000.
Right.
And based on the price of Bitcoin next week, the car could be worth $300,000. So you could have significantly underpaid or overpaid depending on the volatility in crypto. So I'm not too worried about crypto becoming, a method of payment anytime soon. I view it more as an institutional asset, and also something that you can look in terms of, real world adoption. So I already talked about, the intersection of crypto and artificial intelligence. We see a lot more of that going forward, right? And I think the other thing to talk about in terms of trends, I think we'll see more countries in Asia issuing crypto licenses. I mentioned already that Hong Kong has launched ETFs for both Bitcoin and Ethereum. I wouldn't be surprised if other countries followed suit this year as well. So I think we will see a lot more innovation, crypto coming into the real world, and more financial product innovation as well in crypto over 2025.
I see. And you mentioned earlier in our conversation about how Grab is also, optimizing on cryptocurrencies and how you can top up your wallets by using cryptocurrencies. So what new sectors or industries in Asia are you seeing embrace cryptocurrency and blockchain technology in 2025?
I think we're going to see a lot of this driven by stable-coin adoption.
Okay.
At the end of the day, I think crypto will have permeated the masses in a way when people are as comfortable using regular fiat currencies as they are using stable coins as methods of payment. And I think we will see this take off in a big way later this year. And I think a lot of this is driven predominantly by the fact that the United States is proposing a very comprehensive stablecoin regulation bill. And it is my belief that this will get passed sometime within the next 6 months. And once that happens, I think a lot of countries in Asia will also become very confident and more comfortable launching their own regulation around stablecoins. So what you'll then have is people will be comfortable paying in both real Singapore dollars and also stablecoin version of Singapore dollars as well, which is pegged to the actual Singapore dollar. And then, in effect, you're taking no risks as well. I think this is one of the things that we will see this year in particular. Stablecoin regulation is a big deal.
Okay. So Kunal, how should, investors, both institutional and retail, position themselves to take advantage of the growth of crypto in Asia in the next few years then?
I think number one, and this is a word of warning, which I think is very important, crypto is a volatile, speculative asset class, okay? So if you're a retail investor, you need to get into the space with your eyes wide open, right? And we've all heard stories about someone who put $5 into, Kunal coin or Hongbin coin and became like a multi-millionaire, right, overnight. But these stories are rare, right? Yeah. More often than not, it's 98% of people lost their money. And even if you look at Donald Trump's meme coin, right, which launched 2.5 weeks ago, it's down like 70 or 80% in about 2 to 3 weeks, right? So I think it's very important to note that most cryptocurrencies are highly volatile and you should stay away from them. Yeah. On the other hand, Bitcoin, I feel, is a very stable crypto. It's attained the status of digital gold. And it's an asset class which I think most investors, both retail and institutional, should be comfortable holding. It will have lower volatility. And I actually do, and with greater institutional adoption taking place, you're hearing about central banks buying Bitcoin. I mean, the Czech central bank announced last week that they've passed a bill to buy Bitcoin. The United States is evaluating buying Bitcoin for strategic, digital asset reserves.
Right.
And once countries start buying Bitcoin, when central banks start buying Bitcoin, you'll know that institutional adoption has finally taken place. And therefore, as an asset class, it'll become much more stable and you will see price appreciation.
I see.
Ethereum as well has had its issues. It's still 50% down from its all-time high back in 2021. But you have the Ethereum ETF. You have a lot of institutional adoption for Ethereum as well. But it will continue to be more volatile than Bitcoin. So if you're a retail investor, buy Bitcoin. If you get more comfortable, you can look at Ethereum, you can maybe look at Solana, but know that these cryptos are highly volatile and you should be comfortable with price drops of 30, 40, 50% sometimes in the space of 24 hours. And that actually happened this weekend. I mean, Ethereum dropped from $3,300 to about $2,100 overnight, pretty much.
Right.
So you need to be very comfortable with this level of volatility. And therefore, if you don't have the stomach for it, and you still want exposure to crypto, just buy Bitcoin and you'll do well.
It's all about that risk tolerance. Well,
Completely.
Kunal, looking ahead, how do you foresee the regulatory landscape in the U.S. influencing the crypto market in 2025?
I think the U.S. will take a leading role in cryptocurrency adoption globally. As I already alluded to the fact that there's going to be a comprehensive stablecoin bill proposed by the U.S. It'll get passed by Congress and the Senate later this year, which will then make it very clear what stablecoins can and cannot do. And I think once that happens, countries all across the world will start creating their own frameworks based on what the U.S. has done. And it's very clear to me. I mean, over the last few years, the U.S. had a very punitive approach towards crypto companies in general. Crypto companies were debanked. Anyone doing crypto was looked at suspiciously by the government in the U.S. The SEC was sending out all sorts of notices to crypto companies, basically creating all sorts of bottlenecks for them to be able to do business in this space. That has all changed with the Donald Trump administration. You have a more pro-crypto SEC. You have a pro-crypto Treasury Secretary. You have a pro-crypto Commerce Secretary. You have a crypto czar who Trump has appointed, and the SEC has also been instructed to sort of step down on its monitoring of crypto companies in general.
Right.
So all this means is that you will see a lot of innovation in the crypto space. You will see more companies adopting crypto within the U.S. And in particular, you will see a lot more traditional banks offering crypto services in addition to traditional banking. And I think we saw proof of this over the weekend last week actually, when Jerome Powell, the head of the Fed, basically said that he saw no reason why traditional banks cannot offer crypto services as long as they manage their risk effectively. I think when the head of the Federal Reserve says that traditional banks should offer crypto, you've reached a sort of turning point. And I look forward to the next 6 to 12 months to see what comes out of the United States.
Well, as we look towards the next few months here, could a more crypto-friendly approach in the U.S. drive more retail and institutional participation? And what could this mean for the Asia-Pacific market?
I think we definitely will see institutional adoption happening. For example, there was, until a few weeks ago, there was a very punitive bill in the U.S. which sort of penalized banks from holding crypto. And what it basically said was that if any bank provides custody service for crypto, it had to hold it as a liability on their balance sheet. And this was done only for crypto assets and for nothing else. Basically meant that banks were being penalized for providing crypto services, right? Now, if that regulation has now been removed, which would therefore allow banks to do this going forward in the U.S.
Right.
So I think we'll see a lot more banks offering crypto services to both retail and institutional investors over the next several years. And I think we'll see a lot of banks in Asia following suit as well. I already mentioned DBS in Singapore provides crypto services, I believe, to its treasurers and higher-end private banking customers. You will see a lot more of that happening. They probably may start offering other crypto services as well. Things such as borrowing against crypto assets. For example, if you deposit Bitcoin with the bank, then maybe they lend you money against that, right?
Right.
So a real convergence of traditional banking and crypto, I think, is something we will see going forward, right? But again, I caution, crypto is still highly speculative. You need to go into it with your eyes open. It's not for the faint of heart. If you're not comfortable with drawdowns of 5, 10, 20, 30%, be wary of the space and don't enter it.
I see. Well, thank you so much, Kunal, for your time and your insights today.
Not at all. Thank you for having me.
Thank you. That was Kunal Chowdhury, who is the CEO of Apollo Investments Singapore. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.